All of you guys here on a busy day, you've taken, I think, literally half a day, for this. I'm sure you come from different parts of the city, so really thank you for being here. Uh, this is a kind of a joint effort by Thai Mumbai and Cisco. So as you will see, you're get out by all of us. You can't escape. You will have to be here till we decide you can leave. But I think that the topic is fintech, and all you guys, all of us, are part of that ecosystem. We thought it's a very apt partnership. Thai Mumbai brings the fin part of the equation. Cisco brings the tech part of the equation. So the fintech becomes complete. Uh, some of the conversation pieces here are going to be things that are relevant for people here in the room. We are not driving the conversation in any direction. It's going to be really up to all of us to voice our opinions, our views, our fears, concerns, views about the future, opinions, as freely as one can. A little bit about Thai before I hand it over to the tech part, with Shruti, my co-host. So Thai Global, I presume most of us are very familiar with. I mean, there are many familiar faces I see here. People I've been seeing as part of this ecosystem for last 10, 15 years. Thai Global is a non-profit venture, and our sole motive and motto is to help entrepreneurs across different life cycle stages. So right from when somebody envisages starting up a venture to as they scale up, and I'm glad to see so many people here, so many businesses here that have already scaled up and made their space under the sun. Our efforts are in 5 directions. The first and foremost is mentoring from a Thai Mumbai perspective. Networking, education, I think extremely important. And this forum that we are all part of today is, alludes to this part. Funding and incubation, I think, and there's one more friend who walks in. We decided whoever comes last is going to treat us. Drinks are on you, huh? Yeah. Funding and incubation. So these are the 5 legs on which Thai operates. You'll be happy to hear that over the last 30 years of our existence, so it's a 30+ year organization. We have a presence in 14 countries, 61 chapters, and 15,000 members, and over 3,000 charter holders. And we have some of you guys here who are charter members, and and essentially the organization is driven and run by you guys. Yeah, we had a TaiCon some time back. Some of you were part of that event as well. I think why I'm bringing this up is because we already, at our level, at the board, we've started discussing the next TaiCon and what should we do there, etc. So please do keep supporting that event. It's our flagship event, and I think Mumbai, being the financial capital, is pretty proud to be the host of such events, and more so. So I think that's it from me. Let me invite my co-host Shruti to share a little bit from her point of view about the organization, how they can work with each of us in this room and help us in our direction.
Thank you, Rajesh. So you already mentioned fintech, so let me take the other 50% part of all of this. So if there is one area India has made a mark globally, there is no other answer other than finance. That is really the area where India has made a mark in the global space. And I'm sure there is due credit to each one of you who's made your own contributions towards this success path that India is marching towards. I want to quote some observations from what we learned from the RBI's 6 strategic objectives for financial inclusion, as a national strategy. So they're talking about the universal access to financial services, providing the basic bouquet of financial services, access to livelihood, skill development, financial literacy, education, customer protection, grievance redressal, and effective coordination. So now when we look at all of these basic things that RBI has laid out for us as the upcoming strategy, we see there are several pillars which are contributing towards this. Tech we see as an enabler, which is probably fueling some of these. But we really want to understand your perspective as the subject matter experts, bringing in, your thought processes around what are the challenges that you're seeing, what are the opportunities that are coming in the finance segment that can really, make up for the next wave of growth that India can power up for the world. So that's essentially the conversation that we would like to have and understand from each of you, your perspective. So it's going to be a learning journey for all of us today, and we'll definitely take home a lot more of takeaways, best practices, do's and don'ts. Happy to share with my colleagues from Cisco, Vinay, Praveen, and Danish. We're happy to share some takeaways from the tech world while we hear from each of you around your, strength areas. We'd like to, make this as a eventful evening. Thanks to Time Mumbai, who's brought us all together. Thank you so much. So with that, I would like to invite each one of you to give us a minute of introduction about your own self and your company so that we can then get on to a more structured, informal conversation if we can. Yeah?
Maybe we should start from...
Yeah? Sure. Do you have a mic with you?
So hi everyone. Yeah, this is working. I am Dipesh, co-founder and CTO at LendenClub.com. We are an online marketplace for peer-to-peer money lending. I see a lot of friends here, familiar faces, and the rest of you will meet you individually and discuss more about it. But until then, let's keep the mic rolling.
Hi, I'm Omkar, the Chief Product Officer at Perfios, erstwhile founder at Karza. Essentially, we provide the entire backend infrastructure for digital onboarding, underwriting, and basically servicing of loans and customers. So that's the primary space that we operate in. Most of you are already either customers or some competition, healthy ones. So that is good to be here.
Yeah, that's a good segue to me. Hi, I'm Rahul. I work with Idify. I'm the country head, and we are into the identity verification and fraud detection space. We do a lot of work around helping our clients onboard customers safely, assess risk, and do a lot of stuff around fraud detection. That's what we do.
Hi everyone, I'm Varun, founder of Eduance. As you know, we know some of you because you keep providing us capital to lend, so that's good. We essentially finance courses, for individuals that leads to employment. So anything outside study abroad is what we do. We've recently launched a new brand called Visor. I'm just kind of doing a PR of it. I've been told I don't do that enough, which essentially is like a market aggregator or in the simplest way, make my trip for education. So if you get a chance, look at it. Love to get your feedback on that.
Hi, I'm Prithvi Chandrasekhar. I'm from Incred. I'm actually specifically from Incred Finance. We're a diversified NBFC. I lead our consumer lending business. In addition, we also have an education finance business and an SME lending business. Been with Incred for quite a long time, since 2016 when we started. And previously, I was the CRO of Incred. And I think many of you here know me from my risk background, now in a business role, so can speak to both sides of the business.
Very tough to go after Prithvi, but hi, my name is Nikhil Joyce. I'm part of the founding team at Bureau. I look after growth and strategic BD. Bureau is the proper noun, not the common noun. We're not from one of the bureaus, but some of you partner with us and work with us. Some of you will in the near future. But we're in the ID verification, fraud prevention, compliance management, and risk mitigation space. We typically work on single APIs that help you understand if your user is who she claims to be and is she trustworthy or not from multiple sort of contexts.
Thank you. Hi, I'm Vinay Inamdar. I'm from Cisco. We represent the tech part of this fintech to a great extent. So we are joined at the hip, the financial industries as well as technology. Over a period of time, obviously the financial industry has been the largest segment that technology companies have really invested and done business with. Fintech is the new star that we are seeing rising on the horizon. I was just discussing with Sanatan some time back. Somebody is projecting this to be a 70 billion industry over the next 7 years. That has our eyes and ears wide open if something like that happens. But otherwise, I'm just privileged to be a part of this August gathering, hear more from you folks rather than discussing more from our side. The only insight that I would leave you with is that when you are in the fintech industry, with cloud, security, AI as units that you anyways imbibe very deeply, we see this industry being defined by access, convenience, security and trust, and user experience. And these are exactly the areas that we want to approach from our side also and help you understand how technology plays a role there. Thank you.
I'm Pravi from Cisco. I run the sales for Cisco Full Stack Observability, which is basically helping customers with their digital experience management for the customers. So great to meet all of you.
Hi, good evening. My name is Dhanesh. Full name is Dhanesh Sethi. I'm with Cisco handling systems engineering for cybersecurity as an architecture. Thank you.
Hi, I'm Devang Neralap, co-founder and CEO at HighWayPay. HighWayPay is predominantly a student-focused remittance play. We're trying to be building up a platform for cross-border fintech, starting with, again, as I said, student-focused, and that's one segment. We would look at maybe looking at a lot of people around for partnering around here, especially on student loans, study abroad, of course. Varun mentioned about only Indian loans rather than study abroad. If they intend to get into study abroad, we'll be happy to partner with them. And of course, at Prithvi, we can have far more engaging conversations subsequently down there. Thank you. Yeah, so about the past, thank you so much. So I generally don't keep it at for dinner discussions always typically, but I've been a fintech professional for almost about 30 plus years now, and founder of two companies. So one, basically, I've transitioned from financial markets to payments to cross-border payments. So my first company was basically financial technologies, where we had created exchanges when we owned exchanges, multi-commodities exchange, Indian energy exchange. We owned about 15 odd exchanges in India and abroad, across asset classes, stock, commodity, multiple asset, forex and other classes also. Moved on to create omni-channel payment system called Atom Technologies. That was in 2007, and then now this is my third innings as HighWayPay. So that's my just part of the journey right now. Thank you.
Hi everyone, this is Anuj Pandey. I am part of the founding team and the Chief Risk Officer for Ugrow Capital. Ugrow got formed in July 2018, and we are focused to lending to MSMEs. Currently the book size is about 8,500 crore, trying to use data and technology in unique ways to get solutions to SMEs. Thank you.
Hi. Hi, this is Sanatan Kapoor from BuildDesk. I can conveniently take a position of being a fintech in nascent stages to being a well-established player, right, in the market. We do a few lines of businesses like payment aggregation, authentication solutions, recurring payment solutions, affordability, bill payments. So, I think that one of the key things about BuildDesk is that we are in the middle of or at the cusp of an inflection point because of the advent of various payment methods which have really exploded the whole market, right? And the competition is hyper, margins are going down, and therefore the need for diversification is that much higher. Thank you.
Hi everyone, my name is Akshay. I'm currently the Chief Financial Officer at Axio, formerly known as Capital Float. So we've been around a while. I've been with them for about 8 years. We are predominantly an online checkout finance provider, and we've been kind of working on personal finance space as well. I'm looking forward to interacting with everyone later.
Hi everyone, good evening. I represent UB. UB is we intend to become a lending operating system for the debt in India, and our lines of business include co-lending partnerships, securitization, supply chain loans, of course digital collections and compository. So I am one of the founding members at UB, and I'm the CBO. Thank you.
Let me see this. This is working, yes. Because the mic is roaming around from here. So yeah, this is Mukesh Tumar. I'm founding member and the CEO of Parametrics Technologies. We are a IT services company predominantly into digital transformation, and we work with the banking, capital markets, and insurance sector. We have presence in Hong Kong, Singapore, and India. And I was just talking to Rajesh that we were looking at the other three places. That it's all together. 3 places is an aspiration, but yeah, we will do it. And I was talking about certain, I mean, when I think Shruti mentioned about the 5 pillars, that 5 or 6 pillars that RBI had mandated about, the customers, what is that? Clients queries, right? Something like that. So I was talking about one of the queries that, we always have a problem with the banking, that their interpretation of certain regulations is in their way is interpreted, but it is not practical. So just talking to Rajesh about that. But anyways, so nice to have everyone here, and we'll have a good discussion here on this.
Thank you. My name is Ashish Goyal. I am co-founder of Fibe. We are a consumer lender, do across personal loans, education, healthcare, credit cards. We just launched a co-branded credit cards. We are based out of Pune. We are trying to build a financial ecosystem for individual credits, and we are on that path for last 8 years. Continue to be here for next many more years to come. Many of the friends are here and look forward to interact more.
Hi, I came last, so I go last. I'm Deepak Jain. I am part of one of the co-founders of Flexi Loans Technologies. We are an MSME lending fintech, so I go after Fibe or early salary as they used to call themselves. We're solving for working capital needs of MSMEs in India for last 8 years, and have been decently successful in doing that. We have two primary products, a term loan, EMI-based loans for up to 36 months, and we also provide supply chain finance, so both on the vendor as well as dealer side. And the aim is to create one of the largest working capital syndication platform for MSMEs through own balance sheet as well as through partnerships with various large banks and NBFCs. So yeah.
Excellent. So I must state this out. I've been thinking about this. It's been on my mind since I saw this booklet of people who are attending and all that. I've been investing now for 25 plus years in markets, private equity, in venture capital, angel investing, etc. And I maintain, on the listed as well as unlisted side, a list of companies I've missed investing in and who have gone on to do well, right? And today I don't have to look at the list. Some of the faces are here. Fuck. It hurts. But I'm glad that all you guys are here.
I was thinking the other way around. If I were to start a startup, I probably can just pitch right in here because I will have access to all possible capital.
I agree. Yeah, most of these guys are investors in many startups, by the way. Anyway, so let's start at the top and then we'll trickle down. As I think she rightly mentioned, and I think you said that as well, we are here to learn and listen. We are not here to pitch in with our ideas, our views, etc. The floor is all yours. Feel free to speak your mind, etc. And I think the only beneficiaries out of this is going to be all of us, and that's why it's a closed room conversation. So just to set the context, I think for a growing ecosystem, and I'm restricting our conversation to fintech, there are always a few pillars, like the RBI pillars she mentioned. So I think for fintech to grow and to prosper and thrive, I think there are 5 or 6 elements, and there may be many more, but a few came to mind that are essential. And I would really like to go around the table, and please feel free to pitch in if you have a stronger point of view on any of these. But maybe we can start from this side and then we can, go on to my right as well. So there's talent. You really need good talent to build a robust ecosystem. There is infrastructure, which essentially is technology and therefore Cisco and the likes. You need good infrastructure if you really are building scalable. Somebody mentioned $70 billion as a number, or whatever that big number is. Can't do it without talent, can't do it without good infra, can't do it without government. Policies, regulations, regulators, the dreaded words, all of those. I think then education, which links to my first thing on talent, is are we generating that many more educated folks, like-minded people who can really contribute to a growing ecosystem. And the fintech ecosystem, as we all know, and we've all been beneficiaries here, is among the fastest growing ecosystem. It's attracted the most amount of venture capital as a percentage of total VC money deployed in the country, and I think it's the same globally as well. And so therefore funding, the last pillar is funding. Are we able to attract more funding? Do we get those higher, bigger, $100+ million checks? And where does that money come from? So I think these are 6 parameters that I think are extremely important. So let's, if you don't mind, Nikhil, start with you and just anybody, please feel free to pitch in on any of these, talent, government, infra, funding, etc.
Yeah. It's on? Cool. I guess I'll start with the most controversial of them all, which is the regulatory and government aspect, right? Yes. But I think I have a semi sort of warm take here, but at least over the last 3-4 years from what I've been observing, one of the reasons all of us have benefited from the ecosystem is also because we see a lot of regulation-led innovation. For better or for worse, I think technologists in general are very good at finding shortcuts. I won't call them loopholes, but shortcuts to getting things done, right? Like more efficient ways. Most technologists, most of us are lazy people who are ambitious. So we'll find an easy way to get something done, the path of least resistance. But the role of a regulator is typically to listen, but also have that protective sort of custody of the consumer on one end. And I think most of us in the room will agree that we benefited. Of course, sometimes it's painful. Change is always sort of, there's a little bit of that friction when there's change. But in general, I feel India's sort of growth in the fintech, where you have fintechs trying to become banks and banks trying to become fintechs, is also thanks to regulators that have been a little more open-minded to listen to all of us, give us that audience, and think about the consumer, which is what all of us obsess about as well at the end of the day.
See, I was keeping a regulator for like after 30-40 minutes because we are all warmed up. We all want to now speak our minds, but thanks for bringing that up.
Yeah, I won't go with the regulator. Let me go with the infra. I actually think we have celebrated a lot of infra we've created, whether it's Aadhaar or UPI or even the credit bureaus. But if I think about, areas where I worry about our infra, it's some essential public services which are not quite good enough. For example, the eNACH infrastructure with NPCI is nowhere near as good as the fantastic UPI infrastructure run by the same organization. And that creates a lot of everyday problems. I'm looking at the lenders in the room that all of us have to deal with, right? That's a semi-monopoly run by the government. We don't really have an option. I also worry about semi-monopolies that are not run by the government, right? Whether it's Google or with the Play Store, or it hurts me every time I get my AWS bill, right? And we all have to pay that bill. Perfios is in the room, right? And I know it's very profitable for a monopoly to emerge, but as an ecosystem, it is worrying. And you could even think about the actually surprising. We were talking about bureaus, and as a user of a lot of bureau data, I can say this. Over the last 7-8 years, I've actually seen the gap between CIBIL and the other bureaus not diminish but increase, right? In a way, credit to CIBIL, they've done good things, and congratulations to them. But I think if we start thinking as an industry about the infrastructure we need to continue to be cost effective, to continue to innovate, getting all this infra right is essential. Not just the service level, but also the kind of effective competition, which is what keeps the service level improving, right? And I think to some extent we can look to regulators to guide us, but really, I appreciate the relatively laissez-faire approach that the RBI has taken. And really, if we as a group can, create the right infra, we're much better off than asking the regulator to come in and make rules that will maybe have consequences we haven't anticipated.
Infra is expensive, isn't it?
It's very expensive. What we are already doing is expensive. And especially if we're talking about financial inclusion, cost control is essential. The reason why it didn't happen 20 years ago is not because we didn't think of it, but because our infra now is better, right? And so I think that is And competition is essential to keeping that infra cost under control.
Add something to that? Yeah?
Yes, absolutely. As a technology provider, and this is a completely outside-in view. This is not to do with Cisco at all. There is always a trade-off between getting comfortable with a platform and keeping costs in check. And very few companies can tread that line well, because the more you invest in a certain platform, and it becomes a network effect. So that platform becomes bigger and bigger, and hence kind of monopolistic behavior. But at the same time, if you keep stuff kind of constant and do multiple platforms, it's a lot more work on your side. So there is that trade-off, and that goes back actually in infrastructure space also to talent. Because if you have the talent, if you have the people to be able to do that, then you won't need to really theoretically stick to one platform. And that it's a very controversial thing, of course, but I guess it's a trade-off between those two.
Yeah, no, I totally agree. It's highly related, right? I mean, if our tech team wants to hire engineers who are familiar with platforms other than AWS, it's a lot harder, right? And they exist. We all know they exist, but the supply is much thinner. They're more expensive. They're largely doing offshore work. Our ecosystem, India-facing ecosystem is very dependent on a relatively small number of platforms. Yeah, I think it's a very good point. And in fact, we talk at our leadership team level with our tech design about, design redundancy at source, which is a great principle, but not that easy to, deliver. Yeah.
Prithvi, I think it's also a chicken and egg problem. While in the tech talent market, a lot of people are qualifying for the AWS certification because it's like in the vogue and people want to be in there. Of course, there may be so many others qualified in other areas, but then, if they were to look out for opportunities, it would be much lesser. So I want to also hear your views and few others on some of the openness to go beyond the boundaries, beyond learning and qualifying themselves, especially from the technology perspective. Open source, of course, is making waves. I'm sure a lot of you must be using good amount of open source in your tech platforms as well. So how are you kind of striking the balance between going in for some very known platforms versus being open to such newer experiences and exposure with respect to tech and infra?
Is that a question for me or
for you and others? Because you brought this up, I can
kind of take that a little bit off,
flow,
where we've lived through all of this in our own unique way. Look, I think we'd love to go open source if RBI will let us go open source, because the list of requirements on cloud ka ye kya hai, wo kya hai, uska contingency plan kya hai, and you're just like, okay, like, do the new guys have these answers? They don't. So to I think Prithvi's point, you go back to the guys who've done this. So how do you let the newbies come without giving them the support and saying, take some time, build it, we'll do some other contingency plans. So this is where the ecosystem support to even allow competition to come in becomes very important, right? So I'd love to go open source. Will the RBI let me go open source? I'll get beaten up in 2 minutes going like, and they're right? Customer data is important. You have to make sure security is good, data security is real. AWS has proven themselves, and hence they're in the position where they can basically go like, hey, we're going to charge an arm and a leg and a kidney for that. And then you got to pay them.
At such a scale. And I can assure you that if instead of NPCI, if a private company would have done this UPI, RBI would have shut it down. No? So that's a separate thing. No, but it is absolutely a thing. The other thing on AWS, while it costs, it hurts. Every time I also keep saying, yaar, kaise kam karega isko? And they come and give me कि ये इस बार instance इधर हो गया, वो हो गया, इधर कुछ हो गया. They also have no clue कि why the price has gone up. No, but if I go back to the alternate, right? Let it Bajaj Alliance, there was one floor of servers with 10 guys running around into that piece and putting the coolers, etc., to figure out to ensure that the company runs. Today, I don't need to do any of those things. I think my bill still is lower than what if I imagine that servers which are 3-year lifetimes and the kind of softwares which are available on AWS. Yes, it's a monopoly, it's everything, but that's not available anywhere. No. Office migration. It's like office migration is yeah. You just means it's.
I'm saying, with this cloud services, office migration, all of those issues, right, which were there in the erstwhile world, have changed significantly. Even on the points of NACH, when we started the company back in 15, 16, like ACH mandates, you had to train people because none of us have a feet on street of our own, right? So we had agencies all over the country because we were doing fintechs, we were doing loans in some 1,500 plus cities across the country. Now you don't have, so you were training the logistics companies to fill those ACH mandates and ensuring that they get done in 30 days. In many PSU banks, it used to take 30 days, 45 days. From there, it has I think the ecosystem and the infrastructure has changed so much in our entrepreneurship journeys, in last 7-8 years that, for us, honestly, the life has become much better. Yeah, absolutely.
While the charge kidney or both kidney.
Omkar, you want to say something about that? Omkar, you want to defend it?
वो balance हो जाता है ना basically. एक side पे you have perfume, on the other side you have Karza.
But like we were the first ones. Like the amount of means net banking. Of course now the account aggregator is making life easier for us. But that kind of a net bank means like it's amazing infrastructure they built outside, private infrastructure.
It becomes a lot more visceral, especially if you travel all over the world and try and transact.
Yes.
Yeah.
You just become so used to the way the systems are
Working in India.
How quickly we can make payments. When COVID started, I spent about a month and a half in Goa with my family, and I left Mumbai with about 20,000 rupees in cash in my wallet. When I came back after a month and a half, I had some of that left over. Because I have not used that cash for that whole month and a half because the smallest to largest shops, you can just scan and pay, and then when you go abroad, you're like, wow, ye kaun se zamane mein stuck hai, right?
Yeah.
So I think it just becomes a lot more visceral when you see it happening.
One thing we're talking about infra, and we are also talking about payments, which is interchangeably used for payments infra. But if you have to look at credit, right, lending is a complex product, and we have consumer lender on one side, and then Deepak does MSME lending. That is far more complex. Now you have to go further to corporate lending, and that it's not same, right? So when we are talking about consumer lending, which is largely, you mentioned about bureau, right? Bureaus have done a fab job, and then today bureau scores are probably plus something else on mobile that is coming in. Your consumer lending is gone. Now take it as a continuum. If you look at lending as a continuum and then see there is credit for MSMEs, corporates and enterprises. Are we there, right? When from our perspective, when we are looking at loan as a loan, be it a consumer loan to a person or a MSME corporate loan, tackling this is not. They are not similar. Deepak is there. The complexity on MSME is extremely high, and we are not yet there. We are using a lot of stuff, including Nash and pretty much of that. But if you look at, and Perfios does a great job in terms of doing a bank statement analysis, FSA, so on and so forth. But it is much more beyond that. We are not yet there in terms of credit infra, and to be able to simple things of whatever is already available with ROCs and coming together.
No, there's definitely a lot more there, and I believe you growers would be also one of the key players to also propagate that, because I've not seen say Flexi loans themselves plus Ugrow have utilized technology to the best extent possible in the MSME segment. Both of these are sort of pioneers. Flexi loans, I believe, definitely also has a massive investment in-house as well in terms of building technologies around it. So definitely MSME is something that is opening up, and that would be the next leg where you will see massive growth. You have public infrastructure coming in form of GST, you have OCAN and ONDC opening up a new gateway, plus embedded finance and open banking, sort of for you to plug in different marketplaces and get private information even from there through consented mechanism. A lot of that is opening up for MSMEs. I would say where basically there is still a lot more to do, more than MSMEs, would be in agri and rural. That's one area which is where the infrastructure is far ahead.
I'll give you a little different perspective.
Sure.
So many people have talked about costs and all. Yeah. So if you're a fintech, and I'm primarily MSME lending perspective, but true for most lenders. If you're a fintech today, your cost would be higher. This is a given, right? And if you are a lender, then your cost of borrowing also would be higher because you are a fintech. Right. And it is a function of size and scale and vintage, etc. Which basically means you will end up chasing customers who can give you higher yields. Which you talked about financial inclusion. So financial inclusion in fintech are now at this point of time, they are not meeting. Right. And that takes a toll on credit. Because then you are chasing convenience as a positioning and all this so that faster processing can happen, and it takes a toll on credit, and then fintechs will start failing. And some of it we are seeing. There is no way out currently because you are at all times in middle of that journey. So some people are little ahead, some people are so this build versus buy, which you were referring to, or others, I mean, you're always in this conundrum, what to do. It's a Hobson's choice. And you really can't do that much. So the way how this will evolve is the hope and is when you reach a tipping point as far as scale is concerned. But till that point in time, it would be test and fail. And that is the journey we will have to all undertake.
The difference that, for example, we as a founder see here is that you're absolutely right. Like any conversation in the entire lending vertical today we have is dependent on the scale of the company. Yeah. Right. So I'm 100% sure, like when Akshay goes to the market and takes credit versus when Varun goes to the market, the rate we will get is different just because the experience.
Goes to the market,
right?
Like
absolutely. So I think one of the things
HDFC raises money, they get a very good rate.
So see, one of the things that we as a founder in the education space have been trying to do is, can you verticalize lending and say, okay, as a product wise, can you look at us as a little different? Not just at the cost of AWS, absolutely we negotiate there, versus the cost of going to a lender and saying, can you look at this? So I think somewhere as an ecosystem, we need to figure out that can you, instead of just scale, and if you're trying to talk about financial inclusion and everything, can as an ecosystem when it comes together, look at the product itself and say, okay, this is a high yield product like a consumer loan or an EV loan or things like that. What's in an education loan? Being a low yield product, can the entire value chain price the product accordingly? Now, if you're going to have, for example, a payment gateway, I don't know what price you guys have, but like when I talk to my team, they say 1% cost deduct, it's a payment gateway. 1% cost or something you take as a provisions. The other cost goes, in terms of a collection cost. Then you say, why am I doing an education loan? Why am I not doing a consumer loan? Right?
But
so
I think
now, for example, even we have got into, you need to cross-sell and upsell to the same customer because you want to make money. So I think a lot of these things where the ecosystem need to look at a product and say, can we verticalize lending and say, for some of these costs to come down, everybody in the ecosystem identifies it and kind of behaves. And I think that will change a lot of it.
And just as a small interlude, my colleague Mehak is coming around with a QR code, which you can just scan on your mobile. So this will help us to aggregate some of these opinions while, Tai is, of course, recording this and censoring this and letting it out. We also want to aggregate some of your thought process in a way that we can also disseminate this to the right kind of regulatory authorities or, wherever I think the right forum is. So would appreciate if you can share some of your inputs through this as well.
Before we move into industry structure, to almost the point you made, Shruti, I have two thoughts, right? I agree entirely with Ashish. The technology we have now, the infra, is unbelievably good compared to any international benchmark. Never mind for a poor country, which is still what we are. It's unbelievably good. We are very grateful for that, no question. Really, the question is how do we get better? We are where we are. Where we are is fantastic. We can still be better. How do we get ahead? Two thoughts on that, right? One is open source, right? I have been here before, right? I've been around for a long time, as most of you know. And I used to work for a company called Capital One in the US, where we had the same problem with a company called SAS, right? On analytics software. They used to squeeze us every year in terms of cost because we were deeply invested. It was like cocaine. You couldn't get out of it. We don't have that problem. My boys now write their code with, R and Python. And I have other boys who write it up in Java, and it works fine. So, and all of it is open source, right? R, particularly the protocols they get are great. So yes, there is a way out of that. It took maybe 20 years for it to come through, but once it's come through, it's been fantastic. And so that's one optimistic thought. To the thought about, again, international benchmarks, yes, by most counts, we are great. But for example, I was doing some benchmarking with a Vietnamese company, FE Credit, right, which is a subsidiary of VP Bank. The kind of property data quality they have in Vietnam is better than what they have in most of Western Europe, right? So if I'm talking about, LAP, right, which most of your, MSME guys would care a lot about, the quality of underwriting you can do against property documentation linked with national IDs in Vietnam is fantastic. And as we think about, where we want to go, especially to your point about, MSMEs coming, right. These are the things that will actually, move us ahead. So
I think
take 2 points. Yeah, please.
Hit the very, very good point. So one area where we need infrastructure is to ensure that the secured lending, quote unquote, as we call it, for lab product or housing backed product, if that will start, fintechs at scale can become some real competition for traditional NBFCs. Branch economics, as we call it, I personally think that if you invest as a fintech in the core areas of your domain and not go and say that I'll build a Perfios within Flexi Loans, why? Perfios is building and he's charging a fee for that. Eventually, if it's too expensive, there will be competition coming in, and so on and so forth, right? Similarly, IDFI does many services which are phenomenal, and why build that? Your core should be underwriting, and please build those scorecards. That's the USP. As a lender, you will be standing over many others. If secure products come in our foray, I think that's one area where India needs to go a lot.
It's a good segue, right? Rajesh should talk about collaborations, partnerships.
Yeah, and I agree with that. I think just to add on to what Deepak was mentioning right now, because there are 2 pain points, especially when you're looking at cross-border, where I think most of the people are lending out here. And I think what Omkar mentioned was about basically agri and rural is right. But one more area which requires a lot of infra right now is the cross-border space. And that's where I think you see a lot more intervention coming in from the RBI to even global major, because there are two issues out there, because it's not only about movement of money, it's all about anti-money laundering and a whole lot of FATF and terrorism issues around that also, that I think causes a lot of concern. But coming back to the core area, which I'm saying from a student part of it, one of the pain points that we've seen and observed is for an education loan, for example, can we get an education loan to a maybe student as fast as possible, because students are there and they want to get faster loan processing. Typically, on a cycle, typically takes about 7 days to 15 days. Can the cycle time be reduced in terms of doing that? And that, I think, brings the point up to faster underwriting and getting good underwriting algorithms out there, so that basically based on your core data, financial data and other data, I think your ability to even sanction a loan becomes a lot faster. I think that's where you require a lot more technology interventions coming in, both on cross-border space to move money faster, as well as basically on making sure that underwriting happens at a much faster space.
So Rajesh, while I let you segue there, we'll just take 10 seconds for you to input your responses to understand what are your biggest bets for 2024. What's top of mind for you. That's something that we would like to understand the pulse in the room. So we'll just take 10 seconds for you to key in your responses on the form in there. If you have any trouble, just let us know.
Okay, so I may go in first if you want. From a biggest bet from 2024, some of the areas and technologies that we're definitely exploring is the applications for generative AI as well as LLM models. That's one thing that I guess would be on the cards for majority of the players here, and that's one area that will definitely see different sets of applications, and there's humongous amount of data that is flowing, but how do you sort of completely capitalize on that and ease the overall delivery? Even as basic as, for example, how can you move away from the traditional rule-based chatbots to just using
LLM models to better customer service and answer questions in a much seamless manner, right? As simple as basically just uploading the existing documents that you have, let the model learn and answer questions for your customers. There could be n number of models that would be coming in. So that's one definitive area that we see will have a decent amount of impact. It will definitely have, say, a bit of curve in terms of adoption and basically hosting. That another point that I just wanted to make in one problem around infrastructure and technology that we face specifically as infrastructure providers at the back end is we do have to deal with multiple infrastructure providers. We cannot only remain with AWS because also a good chunk of clients, and there is one representation that I find missing in this particular forum, is the larger private banks and especially PSUs, on whom indirectly or indirectly everyone is dependent on here, right? And their infrastructure and their acceptability of a particular product and its infrastructure plays a pivotal role even before, say, an RBI does that, right? So today, the fact of the matter is not a single PSU even has a cloud policy in place today. They don't have a cloud policy, and the reason why is because the folks at the top don't have comfort or complete understanding of the cloud platform. So no one is going to put their hand or neck in line and saying that, yeah, I approve this policy. Right, and that's why basically, if, for example, and the point that Deepak and others were pressing about in terms of the ease of use, right? Because I'm hosting a particular product for a PSU bank, I have to requisition, even if I need one additional server, I need to requisition that at least 4 months in advance. Then they will find out whether cage space hai कि नहीं है, उधर भी लगाना है कि भी connect होगा, and then when it goes live. And here in AWS, I have it on the click of button. So we can choose certain products from a fintech perspective. They are pretty open, but when you have to start dealing with larger banks or institutions, either you go to a private cloud infrastructure or you work with basically their DCs. And that poses a different set of challenge for us, because then we have to rely on open source, easily portable. We cannot be married to a particular platform or one particular service provider. So we work on a multi-cloud environment, and that's one of the key investments that we had done from 2022 onwards, and that's something which is now bearing fruits, which will also show up in the overall performance in 2024. Because even for, say, as basic as basically your disaster recoveries, if you have a challenge with as basic as AWS, they face a challenge in DR because both their primary and DR are based in Mumbai, which most of the InfoSec checklist will not clear, right? So then you need to maintain a DR in Azure, which is in, say, Hyderabad or in a different availability zone. So now how do you maintain that? So that's when you need cross.
That's like the topmost thing that I see on all of your.
So cross-cloud compatibility definitely is one that will be there. But from a 2024, I would see definitely how do we see the applications of Gen AI and LLM models picking up for various use cases. That would be
so
definitely.
I think you clearly articulated the pulse of the room, which is, Gen AI, artificial intelligence and digital infrastructure. Those stand as like two topmost points on each of your head. Praveen, yeah. So I want to actually, get you articulate, especially, a lot of them have talked about multiple systems in place, multi-cloud and all that. So please touch on that as well.
Absolutely. And 2 points actually. So to bring it back to the previous point about building not a monopoly, but somebody who gets a very large share of the market. Gen AI is actually very much in that stage. And so it's like this, right? There are certain players who are building very large models, which are available as services, and they are very easy to use. So it becomes a network effect constantly. There are also options similar to the open source where you can actually build your own models. Now, they may not be to the size of what you're getting as a service. They may be smaller. They may be more suited to what you're doing. And right now, the crunch for the talent in such places is not as bad as the cloud. So it's actually an opportunity for you to actually build LLMs on your own. It's a little more difficult. It's much easier to go to a cloud provider, but that is something you may want to think about. Over a longer term, it may reduce your cost. The entire Gen AI is in the stage where we're not sure where it's going, right? I mean, it's catching on like really fast, but that could be one opportunity. And to Shruti's point, that's exactly when you're looking at multi-cloud, there are ways of looking at it with a different lens to ensure that you're keeping the same SLA or whatever you may call it, but also reducing costs wherever possible. because I used to work for a cloud service provider, so it changes pretty constantly. And so I know a lot of you all already know this, keeping shorter terms contracts and all of that, but you can also look at resource utilization and optimization as well. So, but you'll have to take a cloud independent kind of view, which is also difficult to do because your people are already used to one kind of cloud. So it's also a thought process change that when you're building something grounds up or something new, you take a independent view. And the last part is having that entire visibility on what's happening. The beauty of a cloud is it's absolutely scalable, right? So quick. The downside, and that's why you'll find public sector banks very, very reluctant to go to cloud, it's opaque. It is by definition, right? Because they run massive infrastructures, and so they can't give you the visibility that you're used to when you run your own data center. That's by definition. So it's a plus minus. And that opacity sometimes really scares CISOs. Absolutely scares them, because I don't see where my packet's going. And that's by default, right? So that visibility being built in is also possible. Little difficult, but it's possible. And once you build that visibility, then it kind of addresses both, that you'll be able to move the cloud. So just a couple of thoughts to leave out.
So on the whole infrastructure point, and just to add to what Omkar mentioned earlier as well, I think one of the big themes we are seeing beyond Gen AI for this year is also how all of us in this room are going to adapt to the whole DPDP and the consent sort of framework that is emerging, right? We see it as a huge wave, and it's already here. We see it's going to cause a lot of ripples in terms of how we have to adapt our internal infra in terms of how we take customer data. So some of us here are customer facing, we are fiduciaries. Some of us here are enablers on the back end, so processors. Some of us here are both. We think that's going to be a massive opportunity to build new technology. It's going to cause a lot of ripples in terms of user journeys. That I think is going to be a huge theme for this year in 2024.
I think I'll just take a second to say that you have the next question on the same link that you have open, which is like the topmost challenge that you are looking to combat, right? DPDP is a start in here, and please go on.
So let me just balance this out. There are many other challenges to fintech than just infra and cloud. I think it's getting a little heavy, at least for the fin guy here. But I would love for you guys to also pitch in with the other enablers. No one has spoken so far about funding. I don't know. That's a huge elephant in the room. Nobody's talking about it. Talent. Especially Mumbai, and I had a chat with Ajay the other day on when you're setting up a fintech or a large business in India which has a tech element to it. How do you compete with a Bangalore or a Hyderabad or any other place? What about talent? I mean, these are real challenges. So just a few thoughts on that before we go on to understanding how can people in this room collaborate with each other to make sure that those challenges are addressed.
I think I'll take the challenge part. All right. So as in contrast to 2022 and mid of 2023, I think talent is not that much of a problem now, because we see that there are a lot of layoffs happening because of advancements of Gen AI, of course, and many other factors like that, right? Wherein the tasks that were otherwise, kind of mundane or next to mundane are definitely being automated and even made much smarter through Gen AI. And this is the first time that actually the technology, makers or the developers are actually getting scared, seeing the way Gen AI has taken the, piece in the market. With regards to hiring, I think the bigger challenge would be, upskilling the resources that we have as on today, because this is again that phase wherein before .com bubble, right, there was a different kind of skill sets required in the IT, and after .com bubble there was another kind of, again in the mid of 2000 there was a big demand for the open source, wherein Red Hat had taken a good market share and started pitching a lot, bringing more and more people into Linux and others. Now I think now is the time wherein the traditional way of software development is definitely going to go out. So the talent with regards to what we are doing may not be a challenge, but definitely we also don't want to stick there. I'm sure many of the platforms here are now moving towards a no-code or a low-code platforms, and there you don't need talent, right? You're shipping
right from ideation to delivery has increased massively. And there are so many third-party applications available that are so easily dockable, right? We talk about Stripe in the early 2020, wherein they said that they had just one API just for a payment gateway. I don't know how is that possible. But of course, people are thinking in that direction. So I think talent may not be a problem, at least first for the next 1 to 2 years for sure. But it's about the strategy that we may choose in order to build our application. Right? If you are sticking with Web 2.0, definitely this may not be a problem, but we need to think about Web 3.0 in order to make ourselves ahead of the curve with regards to competition.
Deepak, you were saying something.
So, see, as far as fintechs are concerned, Mumbai is the place to be, right? Because you're very close to banks, which is a very, very critical point if you are a lender. If you're an infrastructure company also, you have to be closer to banks. So Mumbai as an ecosystem again has developed a lot in last 8 years as fintech has become relevant in the tech ecosystem of India. I think platforms like TIE, platforms like Teams have now come, tech entrepreneurs of Mumbai. We need to all come together and do plan more events to make Bombay more relevant as well. Because obviously, not only you need your employees to go to these events, but exchange notes, look where innovation is. I think as a group, we'll have to do a lot more to compete with Bangalore as far as the talent is concerned. Because I think in Bangalore the cross germination is much better or much more than what it is in Mumbai. So again, thought for TIE and
first of all, 3 cheers. TIE has to do, but the work is also cut out. TIE has to do a lot more of these kind of events.
But there is one major factor that plays in terms of choice for any employee between, say, a Bangalore, Mumbai, or a Delhi. It's going to be the rentals, and that's something which is completely out of control for all of us, right? It's the in-hand pay rentals. Because it's the in-hand pay that they get after all deductions and how much they end up saving plays a pivotal role. Plus also availability of opportunities is definitely there. But at the same time, although you have your major banks and other institutions in Mumbai, that's where, if you look at it, majority of the technology players or basically fintechs also have that majority development and tech teams in Bangalore, but you have a sales office in Mumbai. You have a sales office in Delhi, or you have a sales office in Chennai to sort of deal with majority of the larger banks or financial institutions. So that way it functions. And the third is also a choice that an organization can take, whether they want to continue to work from office, you want to call people to work, or you can work remotely. Today, 90% of our staff for majority of the product works from home. We save on the infrastructure on the rentals, plus basically infrastructure or their overall productivity or time to travel, etc. All of those matter. It basically, it's more of a personal call. And lastly, I would say talent in general, in the way of looking at it right now, irrespective of the availability or not, that's also a major cost head for majority of us. And as we move towards, and that's also linked to the funding element, also in terms of the pickiness with which investors are today investing in ventures. They are no more investing in growth. They're investing in with a clear path to profitability.
Once bitten, twice shy.
Exactly. So they're not funding. So it's finally they've realized that we have to fund for people to earn money and not burn money. Right. So that's basically where the people cost is also there. Plus, and that's why the talent who's hiring would be the major question.
I think the one underlying tone that I'm hearing in this group is very one-shaded, right? It's talent primarily enabled a certain standard protocol, and now it is left to the imagination of the payment industry that what all use cases can be enabled. That imaginative part of what those incremental use cases can be, and how the same stack can be orchestrated in different ways to enable those use cases more efficiently than others, kinds of takes a precedence over the ability to build it, which is the hardcore engineering part of it, right? And that is where I think that the discussion on talent cannot be one size fits all kind of a conversation. And therefore, let me tell you that I personally look for some very specific kind of talent to be hired from the banks. And one of the key problems that I find in doing that is the sheer perceptual part of where will you be 5 years down the line vis-a-vis a bank? So anybody who has been a banker, I myself have been a banker for 20 years before I joined BillDesk. One thing that you get completely conditioned to is stability, right? In banking as an industry. And not that some of the bells and whistles which comes being a banker, right, are any less than what comes being a fintech guy on an average, right? I'm not talking about the outliers. So in that context, I think one of the other key responsibility of the fintech space is this whole concept of perennial gale of creative destruction, as Schumpeter in 60s propagated, right? We have to somewhere come out of it. And that is where I think it also gets very perfectly married to the whole narrative of funding winter, bottom line, sustainability, right? So I think if you want, today look at RBI for example, right? RBI has been instructing banks that they are extremely concerned about the nurturing of long-term talent base in the bank because of the sheer attrition which is happening. I think at some point of time, fintech also has to start looking at this whole problem with that lens. That do you have somebody who has that continuity, or it's all Gen Z, which is, if I may put it that way, a bit transactional, and which I believe is okay if you're talking about engineering, but if you're talking about imagining the use case on a very evolved ecosystem of protocols, then where do you go from there? Thank you.
Actually, I'd like to build on Sanathan's point. When we're talking about talent, I think we're making a mistake if we think talent is engineering. From my viewpoint, the most important and the most scarce and the most, I will go hunt high and low for the right individual is not engineering, it's not product, it's risk, right? To almost your point, our business is risk.
In lending, I agree.
Yeah.
In
so, and for us, I mean, and so it depends on the ecosystem. And the talent that we have in risk, which is kind of at the heart of what fintech is dealing with, it's built over decades. It is not some, genius whiz kid who's just come out with some brilliant Gen Z code, whatever it is. No. These are people who know what they're doing and they've learned what they're doing over decades. So I actually would say, both from a what is the agenda for 2024 and how do you deal with talent, I definitely don't want to be swayed by flavor of the month, right? Yeah. I am not going out with big packages for Gen AI programmers or whatever it is. I want the risk guys who know what they're doing. It's the nature of my business, of course. And the same with, use cases, right? I mean, the core of what we're doing as an industry or as a business hasn't changed in decades or maybe centuries. That doesn't change in 2024 or 2025. That core remains, which is risk management. And the way in which we develop talent for that risk management necessarily takes experience. It takes having lived through the ups and downs of the cycle. So I actually maybe that's a banker way of thinking more than a fintech way of thinking. But I think we need that. I think we are, as a group, certainly mature enough to have that way of thinking.
Let me equate your Gen Z genius coder with an AI for a minute, right? And let me put it in the context of risk. One of the key limitations, at least the way I am looking at it, of AI is its ability to react when the market gets volatile, right? And that is where one of the key limitations is. I've been a part of 2008 both sides in India, all right? Pre-2008 audience and post-2008 as somebody who was given the responsibility to clean the mess. One thing which I am extremely sensitive to, right, is lending is not about what profitability you generate over 12, 24, 36 months. I can tell you without taking names, 2 banks in India, in one of the key large consumer business, lost more money in 2 years than they made in 2 decades combined. Right? So anything which falls short of ability to foresee that what kind of shock is coming, and ability which compromise on the ability to react to when the shock happens, right, is something which in specifically the verticals like lending, right, should be looked at with a with a lens with a very high magnifying power, if I may put it that way.
Tying this to your
Yeah.
Schumpeterian principles, right? You can either look at it from an incremental innovation point of view or disruptive point of view. But at the end of the day, what matters is the outcome. Are you losing that money in 2 years or 2
I
decades?
resonate fully with what Anuj said earlier, right? The trade-off that even I have experienced on the lending fintech is between convenience and governance. And when I say governance, I mean risk governance more than anything else, right? And it's constantly this inability of lending fintech to find the sweet spot between these two, which is leading to more destruction than creation over time. And I think a lot of that trade-off, at least to begin with, has been built around the narrative of convenience at the cost of risk governance.
Also, just to add, I mean, most of the lending fintechs, 75% of the workforce is non-tech. They're only using and going out. So one of the key challenges in talent would be, I mean, as Prithvi was just pointing out, to make them learn the spirit of risk in the environment, new environment of digital. And that is something which is quite challenging. And in tier 3, tier 4 towns, the non-tech talent is really enjoying. Today they have a lot of choices. So the attrition actually has gone up for non-tech talent in smaller towns because they have more choices today.
I think the silver lining here, and some of you have more experience in banking than I have in breathing, but the good thing that I'm seeing and the optimistic sort of view here is, I think, to Sanatan's point, right? We see more bankers coming and going past that barrier of inertia to work with fintechs, be in leadership positions at fintech, and bring that experience of sort of banking, insurance, the BFSI industry, so to speak, right? We haven't said the word BFSI so far. We've been saying fintech so far, right? That. The other thing also, and folks like Prithvi, sort of coming back from the US, coming back from Western countries, I think one thing that's happening is India has this marketing machinery, both at the government level and at an individual level, where India is attracting talent, re-attracting talent. There's this sort of talent coming back to India happening. There's also capital that's coming. Every time you look at sort of larger LPs, look at where to deploy funds, and when for geopolitical reasons China gets out of the picture, the obvious choice when we, on our cap table, we have investors from, of course, India, but we also have investors from Japan, we have investors from the US, we have from sort of emerging economies. All of those people want to invest in India, whether it's in infra companies like us, whether it's in fintechs like some of you. So wherever talent goes, wherever capital goes, there is that growth story. And there is, I think, enough reason for us to be optimistic about 2024 and beyond, both on this capital as well as talent front, just because that sort of merging of the old world wisdom and new age sort of enthusiasm is happening across all fronts.
Now you mentioned about this merging and the returnee, mindset. So this also brings us this conundrum of build versus buy. How much you want to innovate within your own ecosystem versus, consume some others. So how do you go about navigating, especially in traditional industries which have been there, BFSI, lending and all those. So how do you go about navigating this decision of partnering versus building your own?
I think clearly it's a GTM kind of decision, right? And GTM versus the cost out there. So if you value GTM, you'll probably kind of buy rather than build. Approach is basically buy first and then build later, because you gain experience and basically again go on, basically later on go on, basically building your own self on the core technologies itself. But there are associated technologies. For example, we are partnered with Karza for basically their APIs and a whole lot of other sets. I don't think we would get into that sort of API spaces out there. It doesn't mean, I don't think that's our space to be in. It is better to partner there. Same thing, for example, if you look at somebody as maybe a kind of, if today or tomorrow you have OSIN coming up, you have a whole lot of lending infrastructure being set up by the India's iSpirit group or something else, we will not go around developing and innovating around there. The idea is to focus on the core. As long as you're even in a core, yes, focus on core and build up on core out there.
Can you also elaborate a little bit more about this partnership in the context of, like you said, BFSI? Not only fintech among ourselves, but partnering or, they're all, like you said, they're all related to us directly or indirectly.
Cisco, for instance, has a partnership with AWS.
Yeah.
Yeah, you may like it or not, or perhaps it's to your advantage. Maybe you should just talk about it for a second.
Oh yeah, definitely. I mean, I actually picked up 2 or 3 points today, and I was in the listening mode throughout, right? And the first thing was about the fact that the cloud costs have really become a significant talking point. It's become a boardroom discussion, right? And this is the same discussion that I had in Bangalore also. I would suggest to this forum here that we have to embrace the reality of multi-cloud, right? I still feel that there is a lot of hesitation in this group about how do we manage, but I would like to assure that things have evolved to that extent where you can still have the ability to manage multiple clouds to the extent that Praveen mentioned, that you can look at optimizing your resource utilizations and managing your costs still, and still be able to get the most out of this entire environment. Right? I also looked at another point which you mentioned, Prithvi, in terms of failures, for example, failures in delays and transactions, and that impacting user experience, maybe that impacting cost, maybe that impacting revenues in their own way. And then how do we address this particular point, right? I mean, I've had discussions with some fintech providers in Bangalore who struggle endlessly to determine who's the one at fault. Is it the agency at the other end? Is it the bank? Is it an ecosystem player? Or is it their own infrastructure which it is at fault? So these are some of the things that that we could do very well with technology. As a player, Cisco, we have decided that we need to be independent and neutral of all the clouds. So whether it is GCP, whether it is AWS, whether it is Azure, we want to make sure that we enable you to buy from there if you require any of the technology, so that you are able to better make use of your commitments to those entities. But at the same time, we want to help you navigate in a multi-cloud environment in a better way, whether it is from a point of view of managing your existence in a multi-cloud, whether it is from a point of view of securing your own presence in a multi-cloud environment, or to Praveen's point, just having better observability of how are my applications performing on different clouds right up to the end user over the internet.
Just to add there, Vinay, we would also want to say that, when we adopt these multi-cloud environment, what Omkar was talking about, that no common policy. The applications are different. Thank you. The applications are different. There is no interop between the apps and things like that. So yes, definitely there are a lot of things being innovated in that area around to ensure that you have a common policy across, or a visibility across the multi-cloud environment, to ensure that what is being put in as one policy for Azure goes for your AWS, goes for your GCP. Plus your applications, when becoming changed from monolithic applications to now modernized applications, where we are talking about APIs talking to or based on API communication between multiple apps. Yes, definitely there are a lot of work being done around that also, to ensure that you get API protection, because security becomes a very, very important aspect around that, because you never know in such modernized environment which APIs are talking to which other APIs. You need to have those controls built in around there. So visibility, policy management, interop, all this put together, this infrastructure related conversation, which I was also listening to for a long, really is a very important aspect. We have been hearing it from many other such forums also. And yes, a lot of work is there around that, which we can probably discuss to let you know that, what all things Cisco has been doing in this area for, helping and solving this problem.
Because talking about fintech, we can't help talk about security, fraud. You touched on risk management and all that. So would love to hear your inputs on how you're managing fraud, risk, and to our interest, what sort of tech platforms you're using currently as well in some of these cases. Love to know your perspectives.
Almost to your previous question, It, I think, overlaps with the discussion on talent. Engineers want to build.
Yeah, it's about innovating for
As
all
a
of these.
business, I don't want to build. I don't want to be the guinea pig. I will buy everything I possibly can and build only when I must. And when it is something unique to us, like the branded user experience or the risk policy, that is unique to us and nobody else will do the same thing. And that is, our core IP, our core business, our identity. Everything else from the cloud to the BRE to the, I mean, now that I'm speaking squarely as a business guy and I'm including risk as a business thing here. Your Gen Z engineers whom I've been, saying bad things about, they all want to build, right? That's the cool thing to do, right? Yeah. And I think I'm speaking here as a lender. If you're in a products business, it might be different.
50 of those Gen Z engineers, we need to build them.
And I also have that as a question on the app in case you have that open, please feel free to,
Also,
chime in with some additional inputs
see
there.
in lending, maybe proprietary is about a risk algorithm. It could be about a certain user journey, a certain way of enabling the clickstream, right? But if you move away from that into some of the other verticals, proprietary can also be about the tech itself. So let me, for example, quote, and this is where I am also giving a different vantage point on the regulator, at least as far as the payments is concerned. Look at the most recent two regulatory asks which has come up in last 2-3 years and which has been the most effort intensive from the industry point of view to build. The most recent one being tokenization. Look at, apart from the whole argument of how it promotes client centricity, data security, right? Look at the opportunity it has created for the payment companies, from building issuer token solutions to enabling token requester services to many other things, right? Go a year back. Then you look at the regulatory ask of e-mandates, recurring payments, right? Which I think somebody quoted. Again, who has built those solutions? None of the banks have built those solutions. Those solutions are built by the payment companies. So that's incremental opportunity. Let's go one more year back. Card control, right? And that is where I had the privilege of interacting with the regulator in industry forums and sometimes one-to-one also. I can tell you one thing, at least on the payment side. At the heart of every conversation is end customer centricity. You may like it as a tech player, as a fintech player, as a stakeholder, or you may not like it. And the may not likes are typically those who are infested with obsolete technologies and therefore find it very hard to make that implementation come alive. If you are agile enough, if you make that change, it actually is translating more into a business opportunity than, if you look at it from a pure compliance angle or a regulatory angle. Let me give you this cardholder example. Without again quoting the name, in 2016, one of the new age private bank implemented card control as a customer value proposition almost 3 years before it came in as a regulatory ask. Right? And when I say card control, I am assuming everybody is aware of what we are talking about, right? Point of sale, form factor, online, NFC, international, domestic, right? So somebody implemented in 2016 as a customer value prop, and I'm sure that majority of the people sitting here are international travelers, and with the additional sensitivity about being a part of the industry, you will all be enabling it while at the airport and switching it off while arriving back, right? So I think at least in payments, it may in the short term look very, very painful to the stakeholders, but let me tell you, assure you rather, that majority of that pain is because of obsoleteness of tech platforms. But in the long run, it's all adding to the business opportunity.
Danish, can I invite you to share your thoughts, especially because we've done many more of innovations and also acquisitions in this space, because we did feel that need and that delta in the security space.
Absolutely. Thanks. So absolutely, the infrastructure, security go hand in hand. We can't have security left to only the cloud adapter providers or the apps which are already been there or the data which is already there. We need to look at that, how seamlessly we can keep incremental security augmentation done for those infrastructure and those services. So yes, you want me to put on something on the high level? Yeah. So look at from the security perspective, and I was talking earlier that app security, very important. Where your traffic is going, where your packets are traversing on the network, you need that visibility. You need to know that where it is dropping, whether it is dropping at my user who's subscribed and using certain apps from their endpoint. Is it dropping at that place? Is it the network in between, or is it the servers which are hosted or apps hosted in one cloud or two cloud, where it is dropping? We need to have that visibility. Apart from that, the encryption is very, very essential. So you need to look at that, how you can encrypt, how the cipher suits can be used to the maximum, and how you can build around looking at that the data which is going on is encrypted, is not putting extra load onto the infrastructure, but it is also giving you the security what you wanted, compliances what you wanted from regulators, from any other perspective you are trying to figure it out. So there are been, simplified way of security mechanisms built in with the new products, new technologies which is going on. We were just hearing that Gen AI, right? That's correct. It's supposed to help put the security around. Simplified way of doing that. How you want to write a policy that using NLP, natural language processing, just simply use that to build around that policies. I do not want this application to be communicating with this other application at this so-and-so hosted server. This should be so simplified that my policies get deployed across.
So
and I have a
two points
visibility.
that I take in here. One is the systems are getting complex.
Absolutely.
The threat interfaces are getting complex.
Yeah.
But what we need to focus on is the simplicity of adoption, and that's where AI can help.
Exactly.
So maybe I want to ping Rahul and Irfan on the topics, because the basic thing around this, the first ever thing is around identity. Oh, sorry. So basic thing around Mukesh, sorry. Around identity, trust establishment, authentication, that's like your gateway into the systems, right? So how do you kind of, ensure that first pass is cleared before you can, get into the
Just
rest
to
of
make
the
it more simplified, maybe something like zero trust. You need to look at who, where, how, what is being accessing. Do we have a control around that? Trust them only for the use of that particular moment. You don't need to trust everyone, right?
Yeah, so that's a constant question we keep answering and asking as well, right? Because there is no sweet spot you ever hit. The moment you build some solutions that help you eliminate fraud, there's new fraud that comes up, right? And again, this goes back to the topic of, like, we're now seeing fraud show up in different forms, especially using Gen AI. You must have heard of what's happening with Taylor Swift, some of the stuff that you must have heard in the market, right? That's just the start, right? We are seeing every day our customers talk to us about photos being submitted in their KYC journeys which are deep fake, right? We are seeing videos being going through our video KYC journeys which are all fake videos. There's no human being on the other side, but they're passing systems and they're actually completing the entire onboarding journey, and banks are not realizing this is not a real person, right? So establishing identity, eliminating fraud, it's a constant cat and mouse game. So we are trying to see how we can stay one step ahead, but it's it's not an easy problem to solve. And I don't think we'll ever be able to fully solve it.
Yeah, I think there's no silver bullet. And I think the other thing I can say is, at least from our vantage point, right? Like, and I know there's a room filled with, folks from the financial industry and fintech, but there are so many other industries that are affected by fraud, right? Like of the several sort of dozens of partners and customers that we work with at Bureau, we have folks from sort of the matchmaking industry where trust is super important. Yeah, exactly, right? You have the gig economy. You have folks coming and delivering stuff at your houses. Frauds become super important. Real money gaming, of course, the whole GST menace sort of saw them sort of take a backseat. But so many of our customers are into real money gaming, and fraud is such a big problem there. And just like Rahul was mentioning, it's a cat and mouse game, because with everything else that we've been discussing, you can sort of take care of the core sort of principles and it still works. And to Ashish's earlier point, right, even on infrastructure, if the core works, it's fine. But fraud is sort of at the edges. So the edge cases is what you need to think of. So we actually have sort of almost like a research lab internally where we're trying to defraud systems and figure out and see if we can be one step ahead of the fraudsters. And we even have anonymous conversations with folks sitting in Jamtara or Bharatpur trying to understand what are they thinking of next. Because in a country like India, the reality is you can go to a Kirana store and get as many SIM cards as you want. You can't stop fraud there. I can go to a railway station in a village and go and pay 1,000 rupees and get as many Aadhaar card copies or PAN card copies as I want. So KYC is a necessary but not sufficient sort of condition. Where do you actually tackle fraud? Is it at a device level? Is it at a behavioral level? Do you look at transactions?
That's the question
all
on
of
your
that.
device.
So,
Currently,
I'll just
that's the
add,
question you want to ask.
So fraudsters are always 2 steps ahead.
Yeah, just take 5 seconds to also, give your inputs. You'd love to capture your inputs on where do you see, this biggest threat coming in from.
So
I obsess about this day and night, so I have to talk about it.
So while we are a user, so first of all, we just humbly accept that fraud hua hai. So that's first thing. And but they are always one step ahead. And it's a constant fight between how much you want to automate versus how much you want to control the frauds and everything. So again, technology plays a big part. While we talk about a lot of KYCs, we use most of the services which is offered by the folks here. But one thing we learned that behavioral mapping of customers has played a big role in us from figuring out how to really capture syndicated frauds. See, the one standalone frauds are easy. They will go through the systems and you will just think that it's a skip. Customer ne paisa le liya and he's just switched off the phone and you are not able to find. The biggest risk comes when the syndicate frauds happens, because they will actually register a company with MCA. For 6 months, they will do a transaction with 100 people, and those 100 people will apply simultaneously to 10 lenders and fraud with everyone, and that company is vanished. And how you really go about figuring out from their bank statements?
So I'll share one experience. So about 3 quarters back, we had a small fraud, and we reported it to the cybercrime police, and they caught people 50 kilometers border from Bangladesh in Assam. And the kind of equipment they had was mind-blowing. So the new Jamtara actually is in Assam.
Contrast that with the conversation I had with the Bangalore cybercrime police, who said, I have nothing except for VP.
The heat map that... not the heat map that I can show you.
There's coaching classes.
Yeah.
Coaching classes that are running, you can apply.
So now what is your game plan, as companies which have to be at the other end, given that you have a business to run, which is using these technologies, you're, providing these lending, credit, loans, based on, such technologies, how are you planning to combat all of this?
See, you build a mess of, sorry.
Two things on that, right? One, the biggest problem that we're facing generally is Aadhaar. This was supposed to be the most secure, safe way. Ek baar check kiya to you don't have to, etc., etc. You can create.
And this has turned out to be a joke, very honestly, because
TRAI has said Aadhaar from Assam cannot be accepted as an ID proof when you're giving a SIM card. But RBI has not said it. So you can't get a SIM, but you can get a loan on the same database that is available. We all have businesses to run, but if the underlying database is so susceptible that it can be, there's no dedupe on fingerprints. That's how fake Aadhars are being made, right, in the system. UIDI, basically, I give my fingerprints, I'm sure mere naam pe 20 Aadhars are floating around because no one has deduped fingerprints anywhere. It's the same fingerprint that's in my database. So no one has thought about building a dedupe on fingerprints. It's just on Aadhaar number. Naya Aadhaar number aa gaya, chalo naya fingerprints le lo. How do you solve that? How does anyone build a business around that? So I don't think it's as simple as saying like, oh, we want to build a business. So you have to go back to the base design of what it was supposed to be. And someone has to solve it. It's very easy for every department to put their hand up and say, don't use it, don't use it, don't use it. Well, how are you going to use it? Because very honestly, that is the baseline of every single product tech is being built on. And if that foundation isn't strong enough, and I don't know if anyone's working on it because I don't live and breathe it like most people here. I just am like Assam for us has come up so many times where like, well, should we just blacklist that and just move on in life? But that's not the right answer, right? But no one goes to the Northeast anyway, right? No lender is present there. Folks who want to go were like, well, that's why they don't go there. So how do you solve this? So it has to be bigger than us. This is not an us problem. This is
controls to be there. It's not just about the fingerprinting, but even access. The reason why the way these are created as well, the fake Aadhaars, is because your Aadhaar Seva Kendra ID passwords were available in the market for 10-20,000 bucks. 20,000 rupees do Aadhaar Seva Kendra ka ID password, you have the entire UIDI console in front of you. Today, basically people are changing people's contact numbers, identity, photographs from these backend IDs and basically presenting themselves as something else, right? The amount of mule accounts today, it's so easy to get a fake ID. I can create, say, Omkar Lakhani tomorrow. Election season आ रहा है. I have to go to my local corporate. भाई मेरे को vote करना है. तेरे लिए एक vote आएगा, मेरा ID बना के दे. He's not going to ask for any documentation. There will be an ID of Omkar Lakhani with the date of birth, address, all ready tomorrow. With that voter ID, I can get an Aadhaar. With that Aadhaar, I can get a PAN. With that PAN or with the Aadhaar, I can get a DN. I can create a complete fake persona.
And mule accounts have become such a norm and they play the patient game. 6 महीना रुकेंगे वो. They will have a proper sort of persona online. They'll create a digital, social, everything footprint. And it's not just used for loans. I know you guys all give out loans, but it's also used in IPOs. It's being used in CASA accounts everywhere.
part of this game. The game is at a much bigger level here.
Two Shrutis.
That are being run, the amount of money that gets funneled through all of these is huge. So there is a much larger play.
Bank accounts are
101 example of everything that's going on. So today's news, I don't know if how many of you read that, but Paytm Bank. Essentially, that you had an action recently on your State Bank of Mauritius. SBI. Entire foreign remittances were paused. All of these are essentially where you have a lot of mule accounts, the issues coming in from there, and money is being laundered outside the country. And especially Payments Bank, where the way the KYC was handled in terms of the digital environment, also it's something.
See, this is one of the reasons why I'm very, very skeptical about a lot of like ease of convenience and the CX being super smooth. And if you actually go and talk to RBI, they're like, frictionless lending kya hota hai? Hame friction chahiye. And then you wonder why he's thinking that way. And then you're like, well, I understand why you're thinking that way because look at what's happening outside otherwise, right? It's a fine line. And which is why for me, like, everyone's talking about Gen AIs and a bunch of things. It's all cool till RBI lets it happen. I'm very skeptical about that because they are not convinced about this. They recently came out, a deputy governor came out and said about, oh, ye AI models kya hote hain? And I'm like, boss, like, how do you answer that question? How do I explain it to you? Because you're right about that, yes, the models, they need data. Data stability is very important for predictability. And I think the earlier point that's another made about, models can't predict the future. No one can. If they could, they'd run the world for us, but let's not go there. So there is uncertainty. It's going to be reactive. It's as good or bad as what a human being can do. And then there are times when you switch off the model saying it's not going to work right now. No one knows what's happening. Let's ride the storm out and then figure it out from there, right? So I think there's a lot more to it.
For the greater comfort for the regulators, it's lacks explainability. And the second point on the user experience, the best user experience from a lending standpoint is you ask for money, I give it. And that's what BNPL was. I put in my contact number, I have a 10,000.
Yeah, I'll disagree, yaar. I'm still here.
No, it's No, they enough who folded up. They enough who folded up. But I actually have a question for the group, right, around the table, right, which is we may be kind of getting to some kind of an Empire Strikes Back moment where analog is the future, right? Largely because of, fraud control concerns, which are getting worse every day. The regulators upset about it. There are enough of our peers who've died because of it, right? And there is, I think, serious questions, certainly in the MSME world, certainly in the secured world, and increasingly in the substantial consumer finance world, where, analog is no longer a bad word.
Yeah, if I may just to kind of extend, I think part of the problem there is I do not know if the regulator has a strong enough understanding of how digital can be improved. They are literally like, ये काम नहीं कर रहा है, तोड़ दो इसको. मतलब literally it's like take the hammer and whack everything out because like go back ना, old world में नहीं था ये. So like I work with a bank. No, they
actually interacted a lot with the RBI on this.
I'll give you a flip side, just because we work with a bank on BNPL, right? And we would like go through all these audits and like BNPL is a bad word, everyone's chore, and you're sitting down with them and you're trying to explain to them and they're like, but why are you doing this product? And you're like, because there's a demand for it and it's not fraud and we're not bleeding money and it's good. But you're a traditional banker. तुम secured करो. तुम्हें क्यों करना है BNPL? How do you answer that question to a regulator? Because there has to be innovation, and let's be honest, RBI loves banks. Eventually, banks doing a product is their dream. Everyone comes, goes, but bank doing it is there. So I think there is, and also RBI being RBI, if you're in Bombay, you are blessed. Sir, you're in Bombay, people understand. Go down to a Kerala, go down to a Tamil Nadu, the party is very different over there. Right? So it depends on where your banking partners are, depends where you are, and who is the guy coming and checking you. Right? If you're fortunate enough, you will get away with a lot because the guy understands, right? To your point, in Bombay, I'm very certain when I come and meet my SSM here, he's like, yeah, cool. Go to Tamil Nadu, meet your banking partner's SSM. He's on a trip of his own, right? So now, you're not here to solve that problem.
I think I really like the flow of this, direction the conversations are flowing, but just in the interest of time, I like the profound statement that, perhaps are we going analog? We definitely are not going analog. We're all in the digital first. Yeah, absolutely. But we can definitely debate that. Absolutely. We're not here to solve for world hunger, but perhaps, now donning the Cisco's hat, there are perhaps certain things that we can solve from Cisco's point of view. So I'm going to take 30 seconds each from Vinay, Praveen and Danesh to help articulate some of Cisco's offerings, places where we can add value so that, after this you can also have some discussions with each of them if you see there is some mutual synergies in these spaces.
Yeah, I'll just take a minute actually. A lot of the technical stuff is there in this. You can just go and read it if you love technology, or you can give it to your CTOs and I'm sure they would love it. But I wanted to say that this entire discussion happened in the spirit of collaboration. You were very forthcoming with your thoughts and ideas. I learned a lot personally. In that same spirit of collaboration, I would like to say that as a technology industry leader, as a tech enabler, as a digital transformation partner to many of you, as well as to banks, as well as to government, and as well as to the regulatory authority, RBI itself, I think we also have some responsibilities, and today I could hear some of those pain points emerging. This is something for us to go back in Cisco, go back to our think tanks and say, when we are interacting with banks now, when we are interacting with the government and looking at some of the policy making that's happening the same way that we do on the industrial side, what is it that we can do to make life better for this entire ecosystem? I took a few points over there in terms of the friction that's arising when you are transacting with your partners. One thought that I would like to leave you with is the fact that many of us have heard of the supply chain attacks, right? And the banking ecosystem seems to be a huge supply chain of its own, right? The number of APIs that you have thrown up everywhere, left, right, center. In fact, I'm very sure you do not have a good idea of your own landscape, where all you're connected today. One small problem at some point can actually cascade across the entire network, which requires a very different approach, a very different view. And that is what somebody like a Cisco brings to the table. So 3 points I want to leave you with. One, please embrace the concept of multi-cloud.
it is for your own benefit. I'm not saying specifically that it is against a particular cloud provider, but you would very sorely find that there are different clouds for different purposes. We need to make your life simpler, easier, and more predictable from a cost point of view. Two, I think observability to drive user experience is going to be very, very, very important in the fintech industry. We want to play a role over there between the code that you're writing right from your DevOps stage to the application that you have hosted to the end user. If something is breaking in the experience, where is it breaking? Why is it breaking? We'll stitch together the view and give it to you. And the third thing that I would want to say is TPDP becoming a reality. Security is pervasive. Security is everywhere. Security is not data. Security is not apps. Security is not connectivity. It is not infrastructure. It is everywhere and all connected together. And that is where Cisco tries to bring together frameworks to help you navigate this better. Thank you.
Nothing much to add after what Vinay said, but one thing is I think we can help on your compute spend reduction. There are ways we can do that. Not to 50%, but you said even 10% makes a difference. Yes, I think there are. I'm setting expectations up front, but no. So, but I think there are ways we can definitely help you with that. We'd love to have a conversation.
Yeah, just to add one point out here. While Vinay mentioned about multi-cloud, simplicity and things like that, you need to look at that, how you can build defense in depth. So layer of security, because that's this, as Nikhil said that, Nikhil, right? No silver bullet, absolutely correct. We need to build layers of security to ensure that each location, we are different vectors, we are covering it up so that something missing, nothing can be broken. You have next layer of security to build around and pick it up. So look at defense in depth, look at multi-vector environment to protect, and we have solutions around that which we can discuss and look at that.
We are happy to take up some sort of proof of value, proof of concepts, or some evaluation studies also, freed ones that we can take this up. So
absolutely.
Feel free to contact us.
Small request towards the end actually. We have advisory boards for a lot of industries. We don't have one for fintech. And I see the depth, the talent, the way we are driving the economy. I would like to propose that as Cisco definitely would want to start an advisory board of our own. We do have one for banking, but I think fintech has different challenges. We would love to have some of you join with us and give us your thoughts, your perspectives, because I'm very serious on the fact that we work very closely with the regulators, with the banks in our own way, shaping the technology landscape. And we would want to use these insights to see what we can contribute from our side as well.
If I may, is it possible to expand the banking ones to include fintech instead of creating a separate one? Because let's be honest, everyone's a fintech 10 years from today. Like the banks have to have tech, right? So the UPI, the NACH problem isn't only mine, it's theirs also. So it'll make us more inclusive. Because increasingly as the regulator starts looking at us as kids who need to be slapped, you want to also be seen as, well, we're not all looking to just monkey around, we're serious. So if you can expand that to include all of us, I think that might be
good
really
to
good.
have NPCI, you and some banks,
And the banks,
on the
because
same platform.
like today, I don't know how many of you got this, but NPCI has disabled Kotak from setting up new mandates. I mean, this is one of India's biggest private sector banks. Randomly, they said, this may now no code. So your customer acquisition funnel, everything's gone for a toss. So without the banks, let's not pretend like we can do everything on our own. We can't. We need them.
Great. Thanks everybody. This has been awesome. As I said in the beginning, we are here to share and learn. I think some of you knew each other. Some of us, we're going to meet many other folks, many other friends and supporters of TIE outside. So let's mingle with them and let's keep this spirit of collaboration on. And you have the Cisco team here. We're all going to be outside. So thanks a lot. And I hope this has been a good use of everybody's time. And thanks to the TIE team as well and the Cisco team.
So on behalf of all of you, I'd like to thank TIE team. And we also have a small token of gratitude for really having all of you here present in such active mode, sharing all of your thought processes. Shabnam and Tripti, can we have you take the lead and please hand over the tokens of gratitude.
We have a mixer coming up on 9th March. It's with founders, Unicorn. So this mixer is with Unicorn, GP and LP. So it will be very high profile mixer which we have planned on 9th March. Invitation will be sending to each of the startup over here. Thank you.